Hi there, welcome to Kneppy Invest. For those pet loving investors out there, potentially a company for you is Paws. This company operates an online pet ecosystem connecting pet owners with an ecosystem of services and products. For instance, this company's marketplace, I'm pretty sure it's called Paws Marketplace, is an online platform for pet owners to book their pet sitting, walking, daycare, and grooming services. Now, Paws also operates an online only e commerce division offering pet healthcare, prescription medicine, pet treats, and specialty items. And some of their brands include Pet Chemist, Wagley, Dinner Bowl, and Sash Beds. Mad Paws was founded in 2014 and listed on the ASX on the 26th of March 2021. So we're talking about almost 3 years ago. So Mad Paws will be celebrating the 30th anniversary on the ASX. The CEO and one of the founders, if not the only founder, is Justice Hammer. I may have made this joke before, but with that sort of name, I believe he should become a judge. So Justice Hammer, if you are watching this video, I think law is in your future. He owns 2.2% of this company, and one of the largest shareholders, if not the largest shareholder, is Bombora Investments with a 16.1% holding. Now, not a very big company. Paws has only a market cap of $40 million. That's at a share price of 11 cents. There has been an increase in interest in this company over the past few weeks. We'll be able to see that increase in interest just by looking at the charts and the volume. Shares in issue 356 million, and the ticker code for this company is MPA. Before we have a look at the December quarter results for financial year 24, let's go back 1 year ago. I like to compare apples to apples, not apples to oranges, though I do like apples and oranges at the same time, but they are completely different fruit. And the reason I do that is because I want to eliminate any sort of seasonality in a company. I'm not sure if Paws has seasonality, but it's always best to compare any sort of financial results to the previous corresponding period, which was the December quarter for financial year 23. So some things I'm looking for here are receipts for customers, whether the company is operating cash flow positive or not, and if they are operating cash flow positive, how they got there. For instance, Paws had receipts and customers of 12.1 million, and they were or did report themselves as being operating cash flow positive by 238,000. However, to get there, they needed $411,000 of government grants and tax incentives. Now, in my opinion, government grants and tax incentives more belong in the financing activities section, which will be section 3. And I usually minus that from operating activities. So if you do that, this company was not operating cash flow positive, not free cash flow positive 1 year ago. And they only had $3.3 million of cash, but they weren't burning through cash all that much 1 year ago. So I suppose that is a saving grace for this company at this point in time. So let's have a look at the December quarter results for financial year 24, just to see how this company has performed in the past year. So now I'm comparing this quarter to the previous December quarter, and I'm looking at whether receipts have grown over the past year in this particular quarter. I'm also looking at the cash flow, the operating cash flow. Has that improved for this company? And everything says yes, everything is on the upward trajectory, albeit fairly slow. So receipts up 2.4 million. And the most important thing when it comes to this company is Paws did find some scale during the year. So receipts up 2.4 million. Product manufacturing and operating costs only up 1 million. Staff costs up 560 million. And they also actually decreased their administration costs by 300,000. So all up, receipts grew at a greater rate than their spending, which means the company was operating cash flow positive by $954,000 in this particular quarter. And for the first 6 months of the year, operating cash flow positive by over $1 million. And that also means, because this company doesn't spend a lot of money in investing and financing activities, some of that operating cash flow fell to the bottom line, and the cash on hand actually increased by $500,000. So things and the business are moving in the right direction for this company. However, did the market take notice? And that's the most important thing. And I'll discuss that when we look at the chart. But before we look at the cash receipts history for Mad Paws, I should mention sitter liability movement. Now, I saw this in the cash flow bridge for the quarter slide in the company's presentation, or I think it might have been in the Appendix 4C. I forget exactly which announcement this was found in. But sitter liability movement tends to be quite important for this company. And you can definitely see that in this particular slide, because I started with the opening cash of 3.1 million, and they show you how they get to closing cash balance of 3.6 million. And the biggest reason why cash increased by $500,000 through the quarter is because of a positive sitter liability movement. And that positive sitter liability movement was $1.2 million. So I want to understand sitter liability movement a little bit more. Went to the annual report. I saw no mention of sitter liability movement in the annual report. Now, to be fair, I didn't go through the annual report with a fine comb, and I went back to the last two Appendix 4Cs just to see how much sitter liability was in those two quarters and if it might have been negative. So some quarters it could be negative, some quarters it could be positive. In both of those previous two quarters, sitter liability movement was positive by a few $100,000. This quarter, again, 1.2 million. And this is the main reason why this company was operating cash flow positive by $1 million. So understanding exactly what sitter liability movement is quite important if you are researching this company for a possible longer term investment. Now onto the cash receipts history for Mad Paws. And this is always has been the first thing I look at when I am researching a company for the first time. My question when I start that research is the growth in receipts or revenue there to continue my research on the company. If I see receipts or revenue falling through time, that is a massive red flag. In fact, you can't get any bigger red flag than a company that is losing market share, or if they're not losing market share, in a declining industry or sector. So I always want to see receipts or revenue growing through time. And to be honest with you, if Mad Paws weren't growing their receipts, I probably wouldn't be doing this video right now. Anyway, receipts have grown from 3.3 million, the first quarter they were listed on the ASX, to 14.6 million. So receipts have almost increased fivefold, we'll say fourfold, over the past 3 and a bit years. And you might argue receipts have really stopped growing as quick as they were growing back in 2022, but they're still growing. Now, some of this growth could be through acquisitions, and I do prefer organic growth, but you can't discount any sort of growth no matter what it is, whether it's through acquisitions or definitely you can't discount organic growth. That's the best sort of growth. Anyway, the main thing here is Mad Paws is growing their receipts, their revenue. So the next thing I want to see after this little stage or this point is I want to see operating cash flow, free cash flow, and profitability also growing through time. Now onto the chart for Mad Paws, and this is an ugly looking chart, not the ugliest I've seen, but definitely the market has not been interested in this company over the past few years. So this is the daily chart from 2022. So 2-year daily chart here. And back in February of 2022, the share price of this company was above 20 cents. So the share price of Mad Paws has about halved over the last 2 years, and it was in a well-defined downtrend. There was a brief period at the end of 2022, start of 2023, where it did look like possibly the sentiment and the trend in the share price was changing from negative to positive, but that was only over a short period of time. And that possible change never really materialized. But possibly we're starting to see a little bit more interest in this company right now. And maybe the reason we are seeing a little bit more interest in this company right now is because of the recent Appendix 4C and the fact this company is operating cash flow positive. No matter how they got there, sitter liability movement, the company is operating cash flow positive. And the reason I know the market is getting a little bit more interested in this company is the volume. A stark increase in volume since the start of 2024. And the other day, we saw the share price rise from about 9.5 cents to 11.5 cents in one day. on some good volume. So some really good volume coming in, which tells us the market is getting excited. Some good up days, some nice one-day candlesticks. And I wouldn't quite say we have seen share price breakout yet for Mad Paws, but at 11.5 cents, and I think share price did close at 11 cents on Friday, the 2nd of February. The share price was at about an 8 to 9 month high. So we're getting into the ballpark where this could be considered a breakout, possibly a positive financial announcement. Now, that's where I am a little bit more hesitant, calling their Appendix 4C a positive financial announcement. But the other two things I look for, increase in volume and a share price at least a 6-month high, preferably a 1-year high, but it is a 6-month high for Mad Paws. This is a potential breakout happening before our eyes. And that's all I have for this look at Mad Paws December quarter results for financial year 24. A potential breakout happening with this company. It does seem like the market has liked their Appendix 4C, and maybe there's other announcements the company has been releasing over the past few months or so that has interested the market. But increase in volume, share price at least a 6-month high. I probably just would prefer a better financial result from the company, but I can't really discard any sort of quarterly report where the company has shown itself to be operating cash flow positive, even though it was because of sitter liability movement. Now, if you have any thoughts about this company, maybe you're a shareholder of Mad Paws, I'd love to hear your opinion. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.